Hello and welcome. This is BQ Prime. I'm Agam Vakil and you're watching the FNO Show, a show in which we take you through all that is happening in the Indian derivatives market space. Well, at the moment, what we are looking at is marginal weakness as far as the benchmarks are concerned. The Nifty holding on to 19,000. And as far as the Bank Nifty is concerned, well, we've actually seen it come off from day's low. So that's also at around 42,700. Remember, it is also the weekly options expiry for the Bank Nifty. So I reckon a lot of focus will be there as well. That's as far as the indices go, but let's also take a look at what's happening in the options market. Now, at the moment, well, of course, all the activity has shifted about the 19,000 mark, and that also becomes a little bit of a base considering max OI is at the 19,000 put. This is, of course, for tomorrow's expiry for the Nifty, and the max OI on the call side is at around 19,100, but that keeps shifting between 19,100, 19,200. Well, in terms of the most active options, as one might expect, is also around the 19,000, 19,100, 200 calls and puts. So keep an eye on these ones, and this is largely, the levels that a lot of the traders are also playing around with. As far as today's expiry in the Bank Nifty goes, in terms of the options data, well, we have max OI in the 43,000 call and 42,600 put. This is a relatively broader range in terms of what we can expect with respect to today's close. But we are seeing a lot more activity exactly where the Bank Nifty is today. So if the 42,700 calls are extremely active, substantial amount of addition seen there in terms of OI, and of course 42,600 on the lower end. Reckon well, a lot of traders are looking to or have already deployed short strangles and short straddles around these levels. So that's largely what we are keeping an eye on. Of course, given the fact that today is expiry, the IVs naturally will also be higher as far as today's expiry is concerned. But with that said, let's shift focus to what our expert can tell us about markets and how he is reading into it. Well, we have Manoj Vayalar of Religare Broking, who's joining us at the moment. Manoj, good morning and thank you for joining in. What's the way forward? What is your reading, not just for today or for the next couple of days, perhaps even going through to next week? How are you reading into these markets at the moment with the data that you have?
Good morning, Agam, and thank you for having me on this show. So let's take it in a bit of positional understanding. See, when the rollover started, when we started the November series, the Nifty and the Bank Nifty both had positional more open interest to what we saw in October. Now, there is a concept of hedge ratio. Hedge ratio is nothing but the net Nifty positions that are there to the prevailing market-wide stock futures, which is rolled from October to November. So from the FIR desk, if you see, they are short by almost 87% into the index future. Now, index is primarily a Nifty and Bank Nifty. So, if you have to see, they are more cautious. The hedge is more, the hedge positions have come more from the index point of view rather than the market-wide position. So, we believe that 19,400, this is the positional weighted average price at which the short rolls have happened. And somewhere close to 43,800, that would be for the Bank Nifty. So, sell on rise is a positional view that we have, at least for this number. This usually works for the first fortnight. So 19,400 and closer to 44,000, that should be the resistance. Now, talking about today specifically, as you said, it is expiry. There are a lot of straddles and strangles which get sold in the first 1 hour of trade. That is when you get the highest gamma for the option. But levels of 42,600 and spot, that is also a weighted average price of the put writing that we have seen in the last 3 to 5 sessions. So I'm afraid that the Bank Nifty might not really dip below that, and there is a possibility of a 250 points bounce on the upside. So 42,850 can be a good target on the Bank Nifty spot. So to trade on that, you buy a 42,700 call option, you get it for 50 to 60 rupees. The stop loss should be 20 and a target of 120 on that in there.
Okay, fair enough. So, well, that's largely what we're playing with respect to the Bank Nifty. Manoj, if you could also, perhaps take us through again what your Nifty call is, because I reckon that you are talking about buying the 19,200 call. Can you take us through the targets and the stops out here?
Right. So Agam, when we started this series, the IVs for the Nifty first time jumped towards a 14%, which used to be around 11 to 12. For the Bank Nifty, that was 16 and a half, 17%. So what we do is we buy a 9th November, which is your next weekly expiry 19,200 call option at 70 rupees. And because we have the intraday expiry tomorrow for the Nifty, you also hedge it by buying a tomorrow's 19,000 put option that you will get it for 40 to 50 rupees. So the net premium you end up paying is 110 rupees. The stop loss should be, let's say, 70 rupees. And this combination, the call and put combination, can go to a total of 180 odd rupees. So if you simply integrate, such a strategy is done when a short-term dip is expected. But after that, a support of 19,000 should act in, and we are expecting the Nifty to bounce from 150 odd point on the upside. So short-term 19,000 to 19,150 is the view that we have on the spot Nifty.
Okay. So, well, we have Manoj's view on the Nifty, that is the next week's expiry, and we also have a view on the Bank Nifty. Well, that said, let's also shift focus to a handful of stocks that we are watching out for. Of course, now we are naturally going to keep an eye on a lot of these companies which have come out with earnings, and we have earnings from L&T where the earnings seem to be, well, relatively stable, but it is under pressure right now at the moment. So we are seeing some shorts building up there. Besides that, a lot of activity around, the likes of HDFC Bank. In fact, that's the usual. BPCL is up around 1.8%. M&M is up around 1.7%. This is among, of course, the Nifty counters which are advancing and potentially seeing some gains to Tata Consumer Products as well, reacting to earnings. Not too much, but up around 1.3% all the same. So seeing some gains there as well. On the losing end, well, we don't have too much in today's day of trade. In fact, markets in general overall are flattish. So we barely have any weakness, at least among the Nifty counters. JSW Steel among one, which is down by around 1.3%. So, well, with that, let's shift focus to some stocks that Manoj has on his radar. Manoj, I'm going to start by talking about one short call that you have. That's on Escorts. Can you take us through that?
Right. So, Adam, the concept works in this way. Usually, when you see the stronger hand, which is called as the institution or at least a proprietary desk, if you might say that, they have a way of executing orders into the market, which happens to be like a volume-weighted average price shorting. So, if you see Escorts, at least on intraday today, 3070 happens to be the weighted average at which the selling has happened. So, this can be an intraday call. Sell Escort closer to 3060 to 70. A stop loss should be 3090. And a target of 3030 intraday is very much possible on the stock.
And can you also take us through two long calls that you have on your list?
Right. So ideally, during the expiry, the last 5 days, we try to boil down stocks where there is cash positioning along with a fresh arbitrage. Fresh arbitrage is when you buy in the stock cash market, and there is some shorting in the stock. There is some shorting in the futures. And this is a way at which the FIR desk or maybe the stronger hands tend to rope in money. So UBL from FMCG, we believe that 1595 to 1600 is a weighted average at price at which this has happened. The stock has almost a 30-32% net positional wrong with respect to last month. So we are expecting 1690 as a target on that. The stop loss should be 1595. Second stock is RECL, also in today's trade is seeing good traction, and we believe the stock has more upside potential of almost 298. The stop loss on the stock should be around 280. We recommend buying it closer to 286 to 287 in the stock.
Okay, so there you have it. That's what we are keeping an eye on in terms of stocks. Well, for now, of course, benchmarks, not much has changed, though marginally in the green. Bank Nifty naturally is a little more volatile as compared to a lot of the other stocks. And do remember the premiums in general overall are not exactly, they're not exactly very high. So, well, it could very well be a very volatile expiry with respect to premiums, provided that you are playing short gamma and playing for the theta. Well, of course, we are, if a 50 point or 100 point move on the Bank Nifty would perhaps displace your stops. So, well, this is something that needs to be read into very, very carefully. That said, well, Manoj, I'd like to thank you for taking the time out and also taking us through your views on the markets. We will be wrapping up and signing out at the moment, but don't go anywhere. There's lots more lineup. Stay tuned to BQ Prime.